So yesterday was my son's, who's in fifth grade, his graduation. We had a celebration right after school. There was a little event out front where the kids could walk through some balloons and everybody was cheering. In that moment, the realization that I had was that what got him here isn't necessarily going to be enough for what's next as he moves into middle school. And on the drive home, I couldn't help but think about the resin buyer, the market that most procurement teams built their approach around. Well, that market has certainly graduated too. It's moved into something that is very different than what a lot of plastic procurement initiatives and strategies were built on. And I want to show you what I mean here. April was the inflection month. The 30 cents a pound of polyethylene increase that landed the run up in polypropylene, the spikes in benzene that led to increases in nylon 6 and polystyrene and the rest of the aromatics. It was really the moment that this cycle has shifted. May looks flat from a headlines perspective, certainly in the polyolefins, further increases in some of the aromatics, but flat isn't the same as safe. It's the new baseline after a significant move. The buyers that are struggling right now aren't the ones that lack skills. They're the ones that are underinformed, negotiating without knowing what their true number should be. Cost pressure and pricing power, remember, aren't the same things. Suppliers have one of them and the buyers have the other, but really only if they're prepared. So I want to talk through each of the four major resins. Let's start in polyethylene. May is trending to flat following the 30 cents that the market settled at in April. Producers, remember, we're trying for an additional 20 cents more. We're not expecting them to get that given what occurred last month. With ethylene flat and export competition absorbing pressure, operating and demand rates have been above historical averages. It is a pause, though, not a pivot. We need to watch ethylene as we move through hurricane season. There's been a lot in the news about El Nino and how that's supposed to be one of the on record years for the Gulf Coast. That actually is an advantageous thing for hurricane development. But as we know, it only takes one and the right spot. In polypropylene, it's the most active market right now. We've seen June increases announced by a few of the producers even before May settles. There is a force majeure still in effect at LaPorte, Texas, the Total plant there. There is a Phillips 66 turnaround coming in June. We did see PGP spot market trades drift from 47 cents down to 43, which is the one cost side data point that's working in your favor right now as the buyer. Suppliers have a real narrative here, even after capturing margin expansion activities last month and the month before. The buyers who aren't benchmarking their contracts, the ones that are negotiating on instinct, that's a losing proposition in this environment. Nylon 6.6, BASF has a 16 cent a pound increase out for the month of May. The bigger story continues to be what we touched on last week with Celanese closing at 5,000 ton per year Singapore unit in July. They are running lower rates in Virginia and West Virginia. This isn't going to tighten supply immediately, but it does change how suppliers are going to begin positioning in the future. This is the one material that I'd be having structural conversations with any contracts you have today, rather than in the latter half of the year in October. PVC is really the outlier, market that's turned quite sharply, very fast. Chinese carbide-based exports of PVC into the market have really killed the proposed increases that were pushed here domestically before they had a chance to gain momentum. The first major resin to really peak and turn. The import competition, when it enters at this type of scale, domestic producer discipline has limits, and PVC is evidence of that. It's worth watching whether it signals anything for the broader market if that starts to happen in other resins. Polystyrene, benzene-driven cost push is overriding extremely soft fundamentals, and it shows why price nominations aren't always justified by the fundamentals behind them, but sometimes they still have horsepower. So continue to push back and point to demand on polystyrene. So the core thing in common here that teams navigating this well have, they know their benchmark before the nomination for price arrived, not afterwards, but before the nomination letter is the start of the conversation. It's the claim. And your benchmark is really the answer. If you don't have the answer ready, you're reacting, and reacting is always more expensive than if you put the preparation in beforehand. So my son, he's going to figure out middle school here in a couple months. He's going to have some hard weeks. He's going to adapt. Resin buyers have that same option. Unlike a, almost 11-year-old, you don't have to learn it entirely from experience. The data exists all around you. And so this is what we do every week, cut through the noise, tell buyers what's actually moving and what to do about it. If that's useful, subscribe, follow along with us. If you're heading into a contract conversation and want a second set of eyes, my contact info is below, and we're happy to chat with you about it. No pitch, just the conversation. All right, everybody have a great week. Travel safe. Enjoy your holiday weekend.